So what is our, just at a very high level, what is our purpose as an investor? Well, it's to generate income in the future. When our income from what we do as work stops, we need to have a nest egg to be able to generate income. And we need to grow and accumulate a chunk of money so we can get to that point and have enough to see us through for, and I'm not going to go through all the risks involved with retirement, with longevity risk and health risk, et cetera, but we need to have enough to live the lifestyle that we become accustomed to when we were earning an income. And some would argue that we want that lifestyle to be better than the lifestyle we had when we were earning an income. But we also need to protect our savings as well, because we know that the market doesn't go up in a straight line. No asset class goes up in a straight line. They have the road's bumpy. It does. All asset classes fall at some stage. We just don't know when. So we need to be aware of that other risk, the risk of sequence of return. The first risk in growing is by not growing enough. The second biggest risk is sequence of returns risk, and that is when the asset classes that we have our money invested in take a big fall just before retirement, or when we are in retirement. If the big falls happen early in our working career, when we generating income through our time that we put into work, then it's not as big a risk. But the closer we get to retirement, and in retirement, the bigger that risk becomes. So we need to, our focus becomes more and more on protection, but at the same time, we still have to achieve some growth. And how do we do this? Well, at a very high level, we need to curate, and I'm talking specifically here about the stock market. Obviously, there's other asset classes, but specifically to in the stock market, to curate and to nurture stock market portfolios. Now, this might be new terminology, and I've decided to use new terminology so that we can get a different perspective, use a little bit of analogy, if you like, to compare this to other parts of our life. And I'll explain curate in a moment. But we can do this either through outsourcing to others, to fund managers, money managers, other people who can take responsibility for our money rather than ourselves. Or we could do it through a self-directed means where we actually skill up, we knowledge up, and we do this ourselves. Or we could do a combination of both, which is what a lot of people do. I do know from our member list of people telling us, and even those that have gone public with it on forums and elsewhere, they manage their entire self-managed super fund with the strategies that we provide. But most people would be a combination of both. So to curate and nurture, we are responsible for our wealth, growth, and protection. We are ultimately responsible, even if somebody else is doing it for us. We still have to give direction, we have to decide on who we do it with, et cetera, et cetera. But ultimately, if we are doing this ourselves, then we have to take responsibility as well. Now, the first step to taking responsibility is actually deciding when to do it ourselves. But that doesn't mean just because we're taking responsibility that we're going to be successful. And we are accountable for what our future looks like. Nobody else is, just us. Now, the growth we need to meet our goals, we don't want to default that to average and status quo returns. Too often people say, my goal is to achieve 8.5%, 9% return during the accumulation phase, and they base that on what the status quo, what the herd returns are out there. We say you shouldn't do that. The environment of the stock market can provide for much higher returns if we know what to do, if we gain knowledge and skills to be able to achieve this. And those knowledge and skills are mental in nature for the stock market. We don't have to have any physical skills here. We don't have to go and learn how to hit a golf ball or hit a tennis racket or hit a tennis ball with a tennis racket. This is all in our minds, our intellect and our attitude. So curate and nurture, do the work. This is us doing, we are doing the curating, not somebody else. What do I mean by curate? Curate means to take charge, to sift through all the solutions and the opportunities out there, and to pull together in a way that, in a strategy, in a pathway, a direction, an approach, if you like. And once we've done that, we then care for that, we feed. You know, the analogy there is a golf course or a lawn or a garden. We have to curate and nurture if that is an area that we like to do. We like to play around in the garden or grow lawns or whatever it might be as a hobby or a pastime. Well, the stock market and curating and nurturing portfolios is no different. We need to keep feeding it. We can't just let it, it's not going to take care of itself. It has to be looked after and fed and protected. And putting portfolios together, curating portfolios and then nurturing them is the same kind of mentality that we have to have. We have to get better. We have to gain knowledge on fertilizers and weed control and et cetera, and watering and how you can. I'll leave you. A lot of you would be into that. Lawns are my go, not the garden, and that's where I got the analogy from. I love growing and nurturing and curating lawns. I also like to curate and nurture stock market portfolios too. And what you should do is focus. I'm not going to talk in detail about focus here. I've spoken about focus plenty in other webinars, but we need to achieve excellence in just one, two, or a few strategies and approaches. That's what we want to try and do. We can't be a jack of all trades and a master of none. We want to focus on a few and get very good at those to achieve our goals. And if they're achieving our goals, then there's no need to change. All we need to do is get better at executing those strategies. And the learning journey never ends.